trading influencers show us huge profit numbers, cherry pick trades. And I get tired of this. But it's nice to see some traders are actually legit, like Trader Nick and Tori Trades. Tori really fights for her results online to try to prove to people that she's actually doing this. And she's been able to show results over the last 2 years. And she's killing me. She's killing me because she's breaking everything that I try to stand for, which is, low conservative results. I always try to debunk all the results that I see from people. I check and scour the internet. I want to see what's real and what isn't, so I can get a better idea of how far my trading needs to be pushed, because I want to make as much profit as possible, but also not risk all of my account. I'm trying to push to the limits without crashing and burning. And it's difficult to do that with everybody online telling you this and telling you that. We don't know what's real and what's not. So Tori's been able to make and produce a profit of 100% per year. That is amazing. But I don't know if she's going to be able to keep that up. And I don't even know if she wants to. I'm sure she thinks that it's stressful risking 10 to 15% on each of her trades. But she's producing around 20 to 30% profit on each of the trades as well. And I did this. I made a mistake on this account that you see here. I dropped it down to 50% using an algorithm. And I realized later on that there were 5 copiers and one of them was a 6-figure account. And so I took matters into my own hands to recover this account, and I was risking 15 to 30% on each of my trades. And I know what kind of stress that brings. So my idea is that she can't keep going at this pace forever, because she's going to want to start to protect her capital, especially once she gets to this $200,000 goal. So are these kinds of gains, 20, 30% a month, actually sustainable? When it comes to actual numbers, I think you can keep it up for a number of years, but mentally, that's going to tear you down hard. So Tori is killing it right now, and I'm not going to lie, I've been inspired by her risk management. I wanted to see if fewer trades and better setups resulted in more profit. And you can see here, over the last 6 weeks, I've had 25% profit with only about 13% drawdown overall. So fewer trades has been giving me great results. I did the same thing on this account that I messed up on using an algorithm that lost 50% of the account. And on August 9th, I started using this type of risk management with my strategy, and I was able to recover that 50% loss that happened on this account, also in about 6 weeks. So far, over the last few months, this is giving me some really great results, and I can see the differences. I'm waiting for setups, I'm waiting for price to come to me, and it's giving me a lot more profit. So I wanted to pause the video and let you guys know I'm currently taking on a limited amount of private students. So those of you that want one-on-one training with somebody that has 20 years of Forex market experience. If you're interested, reach out to me on my website, responsibleforextrading.com. You can also see the link in the description below. Thanks. I've always been that annoying guy that's telling you, hey, you shouldn't be producing more than 2 to 5% because that's the only thing that you can achieve consistently over years and years of trading. And I still stand by that. It's because algo trading is just so much different. It can only really grasp the technical side of trading. And I think most strategies can't produce more than 2 to 5% monthly, which is typically anywhere from 24 to 36% a year. And that is a great target when it comes to auto trading. But when it comes to manual trading using support and resistance, it's a very different ballgame because we can include the technical and the fundamental, the 2 main parts of trading. Discretion helps us a lot on finding the best places to target when all factors are considered. So I want to show you guys a trade that I took yesterday, November 7th, on the Euro Aussie dollar. So I walk you through the support and resistance levels, why I'm taking it at these levels, and show you the worst possible drawdown of the trade before it resulted in this 6% profit. Today is November 7th. The Fed just announced that they're lowering interest rates by 25 basis points. I'm in buy trades on the Euro Aussie. All right, so you can see the first one is 0.5, second 0.25, and third 0.25. So what I'm doing here is I'm targeting the very bottom support level. So the indicator that you see here, this is my custom support and resistance indicator that my developer and I built together. What I'm looking at is this massive move on the downside. So the first target that I was looking for was this resistance point turning into a support level and having a substantial pullback. You can see here that price wavered in here and looked like it was going to try to push up. It failed. It failed at the top resistance right here and then continued down further. Now elections were going on too, so there's a lot of chaotic price that's happening, and so that's why you see this big sell-off. First trade here closed out for a loss at this point. I tried again at this level here, thinking that, all right, so I want price to keep intact with this. So if it went down here and then had its pullback, that's a possibility, keeping this trend intact. So this is basically the last line of defense. So this is the last level. And if this breaks, then I think that we'll likely continue down further. So I'm expecting at least a minor pullback to this level right here, which is my take profit, which is this resistance point. This is a really key level. And I wanted to show my trades where they are right now, right nearing stop loss. So one of them is about to hit stop loss right here. It's about 15 or so pips away, which is my bottom order. So I have a stop loss that's tighter there. So just in case price pushes down a little bit further, it will knock out my stop loss right there. And then I'll wait to get some kind of rejection in this zone before entering a third position. Okay, so my max risk is going to be around 5 to 6%. I wanted to show this because this is the most difficult time to watch your trades, right when they're nearing stop loss. It's really close. But I'm pretty confident that price will have some kind of pullback here. And the reason why is because it didn't happen here. It didn't happen here, and this is its last chance. The more times that it doesn't happen, the more likely I think to get a pullback at its last line of defense on this entire move, especially after like a 400 pip dive. We'll see how this works out. It's difficult waiting for price to just kind of sit around down here, trying to find some momentum, some direction, and really just stalling out at this point, which is probably a good thing for me. I hope that I don't get whipped out where price pushes down aggressively and then shoots back up, but there's no big news to do that. So we'll see how this plays out. But I'm pretty confident in how this should play out. I think that I'll get my target met right here and that the pullback should be decent. If it happens to stall right here, then I might close a little early. Still, this could be an 8% trade if it hits my target. So my Euro Aussie dollar trades finally closed out for profit. So you can see here, trade 1, 2, and 3 all closed at this targeted support and resistance level for 190 pips. All right, so you can see what it looks like on the H4. Really beautiful move, nice pullback right at the last level of support and resistance. So I was getting hints on other pairs that an Aussie dollar sell-off was likely coming. In particular, this was showing on the pound Aussie dollar. So you can see it selling off right here. And when it was at this level 3, that's when my Euro Aussie dollar trade was at its worst. And it gave me further confirmation that I think there's going to be a pretty big substantial bounce here. So you may be wondering, how did I know that it was going to happen right there? Well, I used the last 2 months of support and resistance. I think that 2 months is enough to see how price has behaved at certain levels of support and resistance. And it's our job as traders to find the ones that are the most obvious, the ones that have been tapped the most, the ones that are the most reactive. And to do that, I use the number counter over here on the right side. It shows me how many times a level has been reacted to. I can't just blindly rely on the number itself. I need to look at price to see how it's reacted to that level in the past, to see how strong it likely is and how obvious it is as well. So you can see the reaction here, bounce up, reaction right here, bounce up, reaction right there, bounce up, reaction right here, another one right here, another one right here, and another one right here, and one right here as well. So definitely more than 3. The 3 are the most obvious, but these are the ones that I'm seeing. So this gives me an idea of how strong this level likely is. If you look at the levels below that, you'll see that all of these ones have been tapped a lot less, and they're not as obvious. This looks definitely like a floor right here, and it's our job as traders to analyze this, to find it, because banks and institutions are also going to be looking at these levels. And if we can follow along with them, targeting these obvious levels of support and resistance, it's going to give us a huge edge. Now, I want you guys to follow along with me to see if fewer trades continues to give better long-term results. You can see my stats updated every 5 minutes on my FX book on my website under the mentorship tab. Anyway, thanks everybody for watching. Catch you on the next one.